please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nilesh, how would your stock selection be in a macro backdrop where you are expecting earnings to grow by 15 to 18%, but you are going to see a rupee that will perhaps weaken beyond 68, and bond yields clearly looking like heading to 8%? How will your stock selection be?
Well, Tata, clearly, therefore, in the medium term, clearly exporters throw up a whole bunch of opportunities. It's like you were exporting and whenever you were exporting, you were realizing just 64 rupees to a dollar. And you're now on the verge of going to be realizing 68 rupees to a dollar. And if that further inches up to 69 or 70, you're going to actually get 10% more for you export. Now obviously, of course, some of it you'll have to pass it on, but there's a whole lot of that which you can even retain. So clearly one has to be now very constructive about some of these exporters and sectors which represent a global opportunity. We've seen some bit of technology play out, and we still believe that that's something which is going to continue to play out for some few more quarters. So that represents an excellent opportunity. Clearly, pharma has been a very difficult space from a pure business perspective, but we clearly believe that somewhere the bottom in terms of their actual performance is getting in a way formed. Lupin has announced the results today, and one has to really see those results in some greater detail. But it looks like that somewhere pharma will start offering value, and especially in an environment where you're going to get now 68 or 69 or 70 rupees to the dollar versus 64 or 65 rupees. I think a lot of margin pressures which a sector like pharma faced could in a way be compensated by this depreciation of the rupee. So we clearly believe that in this kind of an environment, probably one needs to be a little more careful, cautious or underweight on the rate sensitives and be more constructive and positive about some of the exporting sectors.
Okay, and I guess metals as well. I mean, Nigel was grinning when you were speaking. Competition, he follows metals very closely. I guess imported metals also will be expensive. So is that a sector? Today, those were the ones that did very well. Tata Steel, JSW, SAIL, Vedanta, Hindalco. Would that also be a sector that will willy-nilly get some benefits?
It could get some benefit, but we have to keep in mind that clearly commodities are a space which are very vulnerable to global developments. I mean, of course, the classic trade is that when the dollar strengthens, commodities weaken. So obviously that has not yet played out this time, but it could really play out as well. And who knows? I mean, commodity prices, especially commodities of steel and iron ore and these kind of commodities, could be down 10–15%, from where they are today. And suddenly you'll find most of these companies not growing or not delivering abnormal profits. So I think that's a very serious risk with commodities. And I think at these kind of levels, one should really not be betting on commodity stocks at all. I clearly believe that our technology and pharma are relatively better place to be versus metals, especially given the kind of move that metals have already witnessed. Maybe a contrarian bet could be also the textile space. We've seen a lot of stock prices of textile companies kind of completely battered, but they too tend to benefit with a depreciating rupee. So maybe that's probably on a relative basis a better space to be in versus being in the conventional industrial metals and commodities.